Good morning. You're watching the market right here on 80 now, and we did manage to stage a comeback in trade yesterday. So from that very, very quiet start, we drift all the way back to that 19,400 print. Having said that, we've managed to snap the 2 days of decline, and we're now finding support at lower levels despite the FII selling, which clearly still persists. So the big question is, will D Street repeat the 2022 streak or not, given the kind of macro construct which is very, very different than last year?
Look, you talk about what's happening in the market, and if you look at the market purely from the prism of, let's say, the short term, last couple of days, you found support at lower levels. Despite FI selling, despite a marked deterioration in macros, and even though the dollar index and the commodity prices have not really been on the right side in terms of the macro positioning, I think markets have done fairly well. Why are markets doing fairly well when FI flows are not exactly very conducive? You've got patches of big block deals and nothing big in terms of a follow-up. I guess that's largely because of the support of the local money. And the positioning of the market, I think, is evident. Let's look at it. Let's look at, these are support levels from where market has found, has managed to bounce back. Now that's the market positioning for you. From the recent high is what we're talking about. Nifty is down by about 3% and the bank Nifty is down by about 5%. But you flip it around with the small cap index and the mid cap index, I think there is a very big divergence there. And that divergence, I think, is what we need to bring out. That FI dominated sector like banks, it's not done well. FI dominated sector are coming under pressure, but retail dominated sector and sectors which are dependent on DI flows or HNI activity, those indices I think are holding on. So the mid and the small cap index has hit an all-time high, and at a time when in general the global macros and the declining trend in the bank Nifty is there. So what could be the scenario? We've put the setup. That this is how things are. Now what could happen? If global macros continue to the way they are, I think it's a matter of time that bulls will blink. I don't think you can go completely in a different orbit. But if global macros improve slightly, then you actually could see a sharpish bounce in the bank Nifty. So in cricket terminology, there are times when you play in the front foot. That period is over. There are times you have to defend. I think that is what you should do with large cap stocks. But there are these odd swing balls you should leave. And I think those odd swing balls are there in the small and the mid cap space.
Yeah, but I think the question is, what's going to cave in first? Are mid caps going to follow the large cap trends, or large caps are going to run up once again as they did last year?
Mid caps are supposed to trade at a discount to large cap. That's the reason why. Traditionally how it is. Right now we are in that phase of the market where discount is over and large part of the mid cap market is trading at a premium. For mid cap stocks to command this kind of a premium, growth has to be supreme and macro conditions and liquidity conditions have to be benign. I don't think that is the situation. That may be the situation. So to imagine that this kind of a premium will continue in mid and small cap stocks is unlikely. That means either these stocks have to come down or large cap stocks have to stabilize. I'm purely speaking out of experience. In general as a category, of course, you'll have individual stocks where different factors are at play. But in generally, since we're looking at categorization.
Yeah, but since you're speaking about global macros as well, it's pertinent to note that you did see the 10-year Treasury yield in the US hit a high. This is of 4.35%, and that's incidentally the highest level that we've seen since the year 2007. So it was up by more than 9 basis points and it traded at close to those 2007 levels, over 6 basis points higher than 5%. You had a mixed close coming in for the US markets, but just going by what these cues indicate, Nikunj, what it could spell for the overall macro picture.
See, interest rates, they act like gravity. Interest rates, they go higher, markets have to come down. So far, markets have ignored that. And I'm talking about pure global markets. If markets are ignoring interest rate surge, which is the 10-year paper and the 2-year paper, it means that bond markets are telling you that rates are going to come down and Fed is unlikely to increase rates. Now, that scenario, this kind of a setup was actually not there, was there in 2021, October to December, when interest rates, they started moving higher and global markets, they ignored it, and then inflation became unmanageable, and then it really became a challenge. Are we reaching there yet? Well, not there yet. But one factor which you cannot ignore is that if yields, they go higher, growth stocks, they tend to underperform, And I think for me, the first indicator which could come of a risk-off trade from the global market would be Bitcoin and Nasdaq. I think those are the two factors which would monitor. I see the following purely based on what I've learned and understood over the years is that in US, the inflation concerns and the bond yield surge, I think, is because of different factors. There are a lot of other factors, the recovery in US market, labor economy, what is happening there. But in India, the inflation is a function of tomato prices, vegetable prices. So while the sell-off at a macro level will soon happen because of inflation, Indian markets will go down, but then everybody will realize that they have a different factor at play, we have a different factor at play, and then markets will start stabilizing. Like they say that history rhymes.
Yeah.
I think we are going to see that same rhyming
narrative repeat
happening because just the setting is so similar to what we saw in December and November 2021.
Although this morning the handover from the globe seems okay, so let's see which way we actually head and what the GIFT Nifty is indicating. A bit of a mixed bag actually for the US markets, if you will. About a 0.6% gain for the S&P 500 index, in the green for the Nasdaq as well, but not quite for the Dow. Asia is a lot better than what it was yesterday, or for that matter, the US handover as well. Pretty much across the board, you are seeing gains of about 0.5%. A lot more tempered, of course, for Shanghai, which is just about marginally in the green as we speak. What's the GIFT Nifty then indicating? Again, a very, very flat start for us, just skirting around that 19,400 print. Although talking about individual sectors, Nikunj, given the kind of demand surge that we've seen within power consumption, these power stocks are flying high.
It's an extraordinary surge, and this is like much higher than what the summer forecast is. I mean, normally you assume that it's only peak winter, peak summer, the forecast, the energy
surge.
demand or power demand would be the highest. But right now that is not the case. It's largely because of maybe the humid weather in parts of India or simply what is happening to the economy. The demand has hit an all-time high. And the numbers are, summer forecast was 230, August record high is 234. But what is important here is that the impact of this sudden surge, I think, is something which will have an immediate impact on the power prices. Now, there are two ways in which you sell power. One is PPA, where you have entered into long-term contracts at a state level, at a central level to supply of power. Then second is that additional power, if demand surges, the companies or utilities, they actually sell in the open market. And that's where the change, I think, is evident. So if one has to understand the linkage here, I guess this demand is too high to sustain. But if demand is high, somebody will make money. Who will benefit because of that? And I think that would be utilities. And companies which have an existing capacity and who have ability to sell outside those PPA, they are the ones who will make money. So for example, in the near term, Tata Power, NTPC, perhaps JSW Energy, those are the companies which would benefit disproportionately. However, what you don't want to do is that you don't want to think that, okay, just because power stocks are up, you want to buy the entire ecosystem per se. I think this is a temporary phenomenon, and in the temporary phenomenon, the best way to do this is that you bet on utilities and power producers, those who have existing capacities, rather than those companies which have a promise of future capacity addition.
All right, that's the overall setup. And of course, when it comes to the global markets, we will be watching out for what emerges from the Jackson Hole meet that takes place on Thursday. But yes, power as a sector definitely merits a mention back home. But lots of other talking points as well outside the world of the markets and in the world of chess especially, that has been dominating the headlines. You've got a blockbuster clash that was set up, and that's with none other than the world #1 Magnus Carlsen in the Chess World Chess World Cup on Monday, where the Indian Grandmaster Ramesh Babu Praganadha registered a very memorable win over Fabiano Caruana, and it was a tiebreak of an action-packed semi-final encounter. You also had Vishwanathan Anand, who actually tweeted saying he goes through in the final, and it was a performance of sorts. That was the tweet coming in. So clearly a lot of action there too. And Nikunj, a feat with this chess prodigy.
Yeah, I was reading in the morning that it's really after Vishwanathan Anand, the great Vishwanathan Anand, somebody has really achieved that kind of a level.
Yeah.
And so young.
Yeah, and just a teenager.
Teenager, yeah.
And I think the final match is tonight. Yeah, it's tonight. So one of those things which, we always talk cricket, don't we? It's time to start talking chess now. That's my limited point. I've not seen the game. I mean, I do like to play chess sometimes, but I need to see the game just to understand, learn, and just think about how things are moving there.
He's actually the third youngest player in the world, and so yes, indeed, that certainly is a feat. And there's also news coming in with the countdown beginning for Chandrayaan-3. That's set to be the first space mission that actually made a landing on the south pole of the moon, and the space agency has said that it's set to land on the moon August 23rd. That's in a little of 24 hours, 6:04 p.m. And certainly this is going to go down in history, especially, Nikunj, after what we saw with Russia. It was a failed attempt, so it's a historic moment for India.
Fingers crossed.
Yeah.
Fingers crossed. That's what I would say. Last time, all of us, in a sense, had balloons and our whistles ready, and we were all, hoping
late in the night. I remember.
Early morning, you get up and you say, "Oh, what has happened?" Yeah, but this time around, it's looking seemingly better. This time around, looks like India and ISRO is all set to create history. 33 hours, the countdown has started. So I'm going to urge our viewers to be with us, because we would be, in this case, covering minute by minute landing of Chandra. In fact, the network has some very special programming. So I would urge our viewers to stay tuned to it. I mean, the science behind this is quite extraordinary. Just think about it.
Absolutely. And yes, like Nikunj said, fingers crossed. Hopefully this time we do make that soft landing on moon's surface. But that's tomorrow. Let's take stock of what's going to happen today in the next few hours when we open for trade. Kunal, Naresh are back with us. Kunal, hi, morning. What's it looking like? The GIFT Nifty is indicating another quiet start.
Well, yeah, another quiet start, but I would believe that we could probably be in a similar kind of a price action for the indices today as compared to what we've seen yesterday. So, for example, an 85-90 point uptick on the Nifty, 150-200 points odd on the Bank Nifty. I would probably expect a similar kind of a performance. We've seen the Asian markets moving up higher steadily over the last 2 days, especially few of the indices like Nikkei, Taiwan, etc. So that could probably also add towards a slight positive move on the index. The interesting data in the last 2 days, what's actually transpired, especially yesterday, was a very sharp reduction in the open interest for Bank Nifty as well as Nifty futures. So almost a 10% drop in the Nifty open interest in the last 2 days, and yesterday itself a 10% drop on the Bank Nifty futures. So that indicates that the price action as well as the open interest indicates that there's been a good amount of short covering in both of these indices. So that could probably now indicate that 90,300 mark should be a formidable support, and looking at the short covering data, I would probably expect that this level should not be broken at least over the next couple of days.
Okay, let's find out what the view is from Naresh then. And morning, Naresh, what's your take on the Nifty Bank Index? What levels are you tracking?
So yesterday was the first day we've started seeing a recovery in both the indices. So Bank Nifty has been able to make that bounce from that 43,800 zone to 43,500 zone. So out here looks like a bounce in play with a stop loss on the lows of the last 3 sessions, both on the Nifty as well as a Bank Nifty. Out here expecting a move towards a 44,600 odd levels on the Bank Nifty could be possible in the short term, 19,600 on the Nifty. So overall, finally we turn to a buy with the lows, with a stop loss at the recent lows.
Find out what those stock specific recommendations are as well. And Kunal, let's get in your take.
I'll stick to J&K Bank as one of the stocks to be recommended on the upside.
Recommending this a few times.
Absolutely. Yeah. So, and the stock has been doing reasonably well. I think from 80 levels, it's yesterday closed almost at 90-92 plus mark. So, which means that the upside potential for the stocks seems to be significantly high. 98 could be the revised target on the upside, and stop loss could be kept at 90 mark. And Bajaj Finance is something which yesterday formed a strong bullish engulfing pattern on the candlestick charts yesterday. So expecting this to be a formidable bottom for the stock. Buy with a target of 7,200, stop loss at 69.50.
Okay, and Naresh, what are the stocks you're betting on? Still Reliance?
Not Reliance, but a buy on Indusind Bank. The stock has been getting into a range of 1370 on the lower end and 1440, 1450 on the upper end. Yesterday also from the lower end made a sharp bounce back. Eventually the stock could break that 1450 mark and head up higher. So a good risk reward buy right now. So a stop loss at 1375, target price of 1500 plus. Second is a buy on LIC Housing Finance. This is a stock which has consolidated and been sideways for many years now. The stock looks very promising. Recently was 8.5 rupees dividend. The previous high for the stock was around 440, which was the resistance for the last 2 to 3 years. On an adjusted basis, now 430, 435 becomes a resistance. The stock at 420 looks promising for a breakout going forward. So preempting that breakout, stop loss at 408, target price of 480.
Okay, let's talk individual stocks as well. News-backed moves that could impact your trading day. And Samit is here to highlight some of those. Samit, I want to pick up on Oro Pharma first. Why this downgrade from Citi when pharma seems to be in a robust space?
Well, if you see on a year-to-date basis, Aurobindo Pharma has run up nearly 94%, and we have never seen such kind of a move from Aurobindo Pharma specifically, at least since 2014. And this is the bigger reason why Citi has come out with this downgrade to sell, but they have hiked the target price because they are still saying from the previous target price, they're still saying that there was some upside and hence there was an upgrade. But the downgrade is largely on the back of expensive valuation. The 12-month forward valuation of Aurobindo Pharma is at 28% premium to its 5-year average. And what Citi is also saying is that they're not expecting any material improvement when it comes to the US generic market. They're saying that on the short term, there could be some upside, but over longer term, they're still not bullish when it comes to the US market. And they're also saying that the company's generic pipeline is not providing comfort for a high growth coming in for Aurobindo going forward. Now, they're also saying that products like Sucrose, Copaxone, the deal filings have been delayed, and when it comes to biosimilars, they are saying that the upside could still be some time away. And currently what the street is factoring in is that they're factoring in a launch for Revlimid. They're penciling in a commercialization of products under PLI, and they're also expecting a potential improvement when it comes to the injectable business of Aurobindo Pharma. But Citi is still not bullish given the fact that they're not seeing much upside when it comes to the US business. The pipeline is weak for the company, and again the valuations are very expensive at this point of time from Citi's perspective.
No, Sumit, my point is that just because stock has run up does not become a sell. I mean, what you got to understand is that, okay, the stock has run up and it is trading above the 5-year average. But 5 years ago, the business cycle was very different for Aurobindo Pharma. The capital allocation was very different for Aurobindo Pharma. I was looking at the Citi report, FY25 estimates, 15 times. I mean, normally stocks where the cycle resumes after multi-quarters, they don't peak out at 15, 16 times. See, all I know is that there is a shortage of medicines in US and generic capacities are not going to be kicking in that efficiently. Aurobindo Pharma does have a lever when it comes to the injectable business, and injectable business is a complicated business where supply-demand mismatch, once it happens, it is not met for next couple of quarters. While the companies are challenged in terms of capital allocation and what they've committed, they've not delivered. So it will never command that kind of a P multiple. But my limited point is that just because the stock has run up, should it become a sell? I think the valuation comfort in Aurobindo Pharma is so strong that I will not be surprised that it may just stretch itself slightly more before it peaks out.
Okay, that's the view coming in from Citi. They believe that as of now, limited visibility on the generic pipeline and near-term levers are already priced in on the upside. IEX, that's the other stock in the spotlight, and CERC has actually floated this discussion paper on market coupling. If you could just tell us a little bit more about what this means and what the issues are in focus that will be discussed.
So back in June 2023, Ministry of Power had asked the regulator to start discussion on market coupling, but there was no development so far on that front. But yesterday evening, the regulator has come out with the staff paper on market coupling. Now, this move of the government is pretty much widely known, but again, this step appears to be one more move closer when it comes to implementation of market coupling. Now, what is market coupling? Market coupling is a model where the buying and selling of electricity from all the exchanges is aggregated at one bigger exchange, and then there is a price discovery happening there, and that's the price at which the electricity will be exchanged and settled. Now, currently what is happening is that there are 3 exchanges in India. There is IEX, there is Power Exchange, and then there is Indusind Power Exchange, and prices on all these 3 exchanges vary, and this will move out once market coupling is implemented by the government, and this could impact IEX dominant market share of around 90%, because once market coupling is implemented, exchanges will actually have to fight for volumes and better services and lower discounts on trading margins, and this could impact IEX financials and their market share. Now, what are the matters that will be discussed? A host of matters are what the committee is planning to discuss, which includes whether actually market coupling should be implemented in the Indian market or not, who will be the operator when it comes to market coupling, which algorithm will be used, and which market segments should be first introduced to market coupling. Should it be the long-term rates or the short-term rates. Now, what will happen going forward? Now, till September 2023, they are going to invite the comments and there will be discussion. Then there will be a draft regulation if at all they expect this to be implemented, and then finally the final regulation would come in. But till that time, there will be a constant overhang on the share prices of IEX, and we have been seeing this even in the past. From the peak of 300 rupees, the prices IEX share prices have come down to 123.
Yeah, I don't track this one. I must confess. So I'll have to say ignore.
So then we'll do new stocks on the editor's radar. Okay, but thanks very much, Samit, for really putting all of those details into perspective. It is going to be something that will be tracked very closely. But let's move right on. It's the big exclusive, and guess what? Right from the headquarters. This is of the two-wheeler major Bajaj Auto, as the ED of the company, Rakesh Sharma, shares the growth roadmap, saying that there's a big opportunity that's emerging in EVs and that the recent tie-ups with Triumph as well are going to bode well. Listen in.
Do you see the EV portfolio, whether it is e-rickshaw or e-two-wheelers, can they add more than 10% to your total kitty next 2 to 3 years?
Well, that's a function of the
But you see
numerator
that
and
happening,
denominator. But certainly, I think with the kind of political support which is there in India and many other countries, with the kind of switch which has happened in the mind of the customer about the viability of the electric option or the appeal of the electric option. And if the ecosystem of batteries and cells moves, the commercials move in the downward direction, and if all these things happen, certainly the electric transition to electric will continue, and definitely more than 10% odd would certainly, it's in the realms of possibility.
And would you say the new JVs which you're forming up, whether it is with Triumph or whether it is with KTM, they could add another 10-15% in 2 to 3 years?
Well, KTM is a success story, as you know, because that kind of that partnership started in 2007 and has gone again to many, many countries, many different kind of product formats, etc. And Triumph is a non-equity partnership, but a very strategic partnership, and has just commenced. The whole idea is to expand that franchise, and as its opportunity will probably be bigger in the medium term than the KTM opportunity. But as the next few months unfold, we will get a better fix of the numbers and what kind of an impact it would have. But directionally, we feel that it'll be bigger than KTM. KTM is still going very strong. It'll continue to hopefully prosper. In due course of time, Triumph should exceed that. But as a percentage, let's see where the ball stops.
Back with the market, right here in 80 now. Still pretty sedate. That's what the Gift Nifty is indicating as a start for us. But let's see whether yesterday's momentum, at least in the last 1 hour or so, when we did manage to pick up and made it back to that 19,400 print, whether that holds or not. So yeah, but once again, 19,387 thereabouts, that's where the Gift Nifty is. But a lot of individual stocks in focus, and Macquarie has maintained an outperform rating on HDFC Bank. In fact, the brokerage note is stating that there could be near-term pressures in the stock as well, and UBS has maintained a buy on this particular stock. So let me take it across to Harsh and find out a summary of both these notes. Harsh?
Bank management met with several analysts as well as investors in Singapore, and essentially what Macquarie has done is they've in fact upgraded HDFC Bank in terms of target price, and what they're suggesting is and they've titled their note very interestingly, saying that the elephant will dance and that you just have to be patient as investors. What Macquarie seems to be suggesting is HDFC Bank is confident of doubling its balance sheet in the next 4 to 5 years, and Macquarie believes that they're going to be able to do that. They believe that there are several levers with regard to ROAs getting better. One is, of course, your NIMs, which will compress from that 4.3% on interest earning assets to 3.9% as a result of the merger, will also have scope for expansion going forward given unsecured. And what they also believe Secondly, is that OPEX ratios will start to come off. You're currently seeing your cost to income at around 43%. They're suggesting that HDFC Bank expects that to be at 40% pretty much immediately, and will start to taper as branches start getting more and more profitable. But HDFC Bank's management seemed quite positive on the back of that, on the back of rather the meeting with Macquarie, and Macquarie believes that, or they've given a thumbs up to that management guidance that HDFC Bank seems to have given them. What they're also suggesting, interestingly, is the fact that they've maintained their buy rating, and the target price that they've given is 2110 per share. But they're suggesting that the bank may take some time to correct, maybe post FY24. So one will have to wait and watch as to how that plays out. UBS also positive on HDFC Bank, given a target price of $1,900 a share. They believe that there are three opportunities, three challenges. The challenges being deposit growth as well as loan growth, and ROA differential getting compressed, and the opportunities being relative NII trends, operating leverage playout, and the ROA uptrend. So largely, both brokerage notes positive on HDFC Bank.
India is now emerging as the port of call for manufacturing. And one company which is really going to be occupying the front seat there is Bharat Forge.
India is the opportunity. India today is where China was in the late 90s, early 2000s.
Wow.
And we have world-class products that we have developed, and I'm very confident that this will give us huge business going forward.
All right, let's move right on then and put the spotlight on BEML. There have been recent order wins. What is the outlook when it comes to their order book and revenue targets? Shantanu Roy is the Chairman Managing Director now joining in. Mr. Roy, good to have you on board. Given that we have seen strong traction in defense and rail and metro orders over the last few quarters, and even the potential over the next 2 to 3 years looks promising, what is the kind of revenue that you're targeting? Is 7,000 crores in FY26 on track?
Yes, more or less, it seems we are on track. And, in defense, there is a lot of traction, definitely. And in rail metro, yes, we are depending upon some of the orders that we are expecting to be finalized in the metro sector, as well as in the rail sector. So definitely we'll be on track with these.
Right. Mr. Roy, your order book is currently at 12,800 odd crore rupees, right? Break it down for us in terms of how much contribution comes in from rail and metro, defense, mining and construction.
On date is 12,800 crores. We have just secured the 3,100 crore order for the Bangalore Metro rolling stock. And there the breakdown is basically around 60% of that order book is rail and metro, 30% is in defense aerospace, and 10% is in mining and construction. Now, mining and construction, why it is 10%? Because generally the orders start flowing in from the third quarter. And generally it's a fast moving product. So we are able to deliver in a span of 5 to 6 months. So whatever orders we'll book by October, we'll be able to liquidate the same by March 2024.
What is the worth of the orders that are imminent in the defense and metro projects, and what is your targeted order book?
For the current year, we have already booked around 5,000 crores of order since April of this year. And we expect to book another 7,000 to 9,000 crores of order by March 2024. So that we'll end up with around 17,000 crores of order book as on 31st March 2024, provided we are able to achieve a sales revenue of 5,000 crores this year.
Right. But can we see rail and metro as well as defense projects, which are higher value and require less manpower? So, I mean, will margins improve here then?
Yes, definitely we can expect that our margins will improve, riding on the bigger share for the defense and rail and metro orders, more specifically on the rail orders, because metro is again, the margins are very tight. There is a lot of competition in the market, but as far as rail is concerned, yes, we can expect better margins.
Now, your employee cost as a percentage of revenues is quite high, around 21.5% in FY23. And despite trending downwards in the recent years, do you think that it can come lower even further? And if so, how?
You see, the employee cost as a percentage of revenue was quite high some 3-4 years back. Now we have brought it to at a level of around 22%. And basically, one thing is that our revenue, as it goes up, the employees also, the number, it will go down because of natural attrition. We will have a reduction in the number of employees by at least 25% in the next couple of years because of their superannuations. But at the same time, we'll be recruiting also to fill in the gaps in our skill sets. So I believe in absolute terms, maybe the employee cost may go up, but as a percentage, it will be at around 20% of the revenue in the next couple of years. We'll try to maintain it around this and maybe even lesser than this.
Sure. Mr. Roy, you're guiding for a 200 bips plus EBITDA margin increment in FY24. What do you think is going to drive this growth?
You see, we have had a regular growth in EBITDA over the past 3 years. And in terms of percentage, now we are almost hitting the double digits. Now the growth in EBITDA will be again guided by, number one, our higher share in the defense vertical, our higher share in the rail vertical, as well as our efforts at bringing down the cost, rationalization of design, restructuring the manpower, restructuring the resources in the company, and of course, working on various other strategies of growth and bringing down the cost, as well as a complete focus on quality.
What is the outlook on the orders in defense and aerospace and the further orders after the completed negotiations for HMVs and command post vehicles?
Our expectation is that by say next to next year, we will have an order book of defense in aerospace almost to the tune of 7,000 to 8,000 crores, and which will make at least 50% of our total order book. That is what our expectation is for the next couple of years.
Right. Mr. Roy, lastly, the 200 crore rupee capex which you've planned in FY24, which is high compared to your previous 50, 60 odd crore rupees levels. What is this capex specifically for?
The capex in terms of percentage is almost 5% of our revenue. And that is being used mostly to, generate our capability to handle overhauling of some defense vehicles, plus developing a capex for augmenting our rail and metro facilities, plus capex which will be used for developing our capabilities for further strengthening our core areas in defense, like the armoring. Apart from that, we are also infusing capex in replacing old machines with newer machines having a high level of IT or Industry 4.0 in that. We have also introduced Industry 4.0 on a pilot basis, and we expect that we will invest more in such practices so that the best in-class manufacturing facilities can be created in BML.
Okay, let me also welcome on board Mr. Roy. Firstly, thank you so much for taking the time out and joining in. Rahul Shah as well joins in on the show right now to talk about which way the markets are going to be headed. And Rahul, can't take our eyes away from what's happening within the power sector. I mean, even as of yesterday, be it Tata Power, NTPC, PFC, REC, most of these stocks are already at a 52-week high. A, what's driving this move? And B, would you recommend buying into these names afresh or even adding positions here?
Hi, good morning. I think, as rightly pointed out, I think power sectors has been buzzing. I think if you look at Tata Power, if you look at JSW Energy, which is also trading almost at the 52-week high, and obviously, as you rightly mentioned, the power finance companies, PFC and REC, both are also trading at 52-week high. So I think two things were visible. I think one is obviously the power demand is continuing to go on a rise, and which will continue, which we saw in the last quarter also, that I think the demand for them and the consumption was also at very high levels. So if you look at the PSU pack, I think NTPC, which after a long time, I think came into a new range. I think if I look at it post listing, maybe 10, 12 years back, or maybe more than that, I think post that, I think we've seen the comeback of NTPC coming back to those levels. Similarly, the entire power sector have been seeing a buzz, be it private as well as or the public. Now coming back to PFC and REC, I think if you look at it, strong commentary from the numbers, both the management which gave the post the numbers, and secondly, I think still they are trading at a good valuations and cheap valuations. I think that would be some more upside with a dividend yield of 8 to 8.5%, with a dividend payout policy of 30%, and I think way they come back in the power as a sector which is coming back. So I think this entire sector will get re-rated, and still I think there's a lot of room for them, PFC and REC especially. So I think if somebody wants to play a proxy to power, then I think these are the companies with a limited downside, and I think that would be a good upside from here onwards also.
Let's move on. Stocks on the editor's radar. And Aisha, you stole our stocks, but we'll be discussing those power stocks in greater detail. Talk a little bit more about the power demand as well, which is at all-time highs, Nikunj, and now a lot of factors as well. And what does this mean for the likes of NTPC, etc.?
Why has demand gone higher? It's largely because of monsoon and the weather conditions. It is higher than what the peak summer was. So it's not always weather. I think it's also the demand which is coming from the industrial sector also. What's interesting, Avan, here is that we don't talk about it, is that if you look at the pattern in the power demand, it's not universal. So the day demand is less and the night demand is high. And you would say, kya ho raha hai? I mean, it is not that we're consuming more power in the night and we're consuming less power in the day. That's largely because India has done a lot of solar capacity addition. Since you've done a lot of solar capacity addition, post the sunset, the power which is getting generated from those solar capacity which have got added, I think is less. As a result, the power demand surge and the demand from the traditional thermal power utilities, I think, is very high. And that is why you could ask yourself, okay, demand is high and demand in the evening is high. Who are the companies who would benefit? And that's where this graphic comes in. Companies which have traditional source of energy, and that's where NTPC scores and Tata Power scores. Tata Power has large installed capacity, but they are not expanding in thermal. NTPC has large thermal capacity, but they're committed to expand both non-renewable and renewable. So if you're looking at this as a trend, which is that power prices will remain elevated, power demand will remain high, winter demand is going to be strong, this mismatch of demand night more than day, then you're actually looking at a very differentiated approach. So go for folks which have existing capacity, which will benefit because of this deep surge. Second, power cannot be stored, but JSW Energy is saying that we will be able to store power. You store power with this new technology they're coming with. So that's become the other port of call. So the theme here is power demand, but within that, day demand is less, night demand is more. And if the demand comes, what is available will be sold more, which means that existing companies with capacity, I think they will outperform. So don't go for the power capex theme right now.
Be selective.
Don't go for the power capex theme. Don't go for companies which will benefit when the power capex will start. Power demand is real. It's here and now. And here and now, existing folks which have thermal capacity, less solar will benefit.
Less solar are likely to benefit. Aisha, that's the view on the editor's radar.
Okay, great power, and what a move in these power names, right? Kunal, what about some of the charts like in NTPC, PFC, REC, and yesterday's big mover, Tata Power?
Yeah, I think NTPC specifically looks all the more very attractive because the stock has come out of a major correction as well as a downtrend. I think if I'm not wrong, there was this 8 or 9 consecutive months of uptrend for NTPC over the last many months, as well as the prices have managed to break out of two important hurdles: 180 mark, which was a huge resistance for NTPC, and then 200 levels again, which has been a major psychological factor or resistance for NTPC for years gone by. So I believe that that's a more powerful breakout. Even in the last 4-5 days of this market downtrend or sideways range for the indices, the stock has been a lot more sideways and it's forming a bullish flag pattern. So I'd be very bullish on NTPC from even from current levels and expecting the stock to continue to move up higher steadily. Tata Power, on the other hand, the stock has a major resistance at the 250, 255 odd mark. This was the previous swing high for the stock, I think a week or two back, and the stock had taken major resistance over there. There were some open interest factors which had changed for Tata Power at those levels. So we'll have to wait out for a reconfirmation of a breakout about 250 levels to be bullish again on Tata Power.
Rahul, the other pocket which has been very vibrant of late is pharmaceuticals, right? And I just want to pick up on Oro Pharma. The fact that the stock has already risen up 90% of late. A couple of brokerages are now downgrading it to a sell, saying that the catch-up or rather the run-up in the stock has been very steep and the US generic conditions may not actually sustain. Wanted to understand what's your preference within the pharma sector?
So I think two things have happened in the pharma space if you look at it. Obviously, I think post-COVID, I think the numbers were not so great in last year and a half. But like last 2 quarters back to back, I think there has been a surge in the numbers. And I think a lot of entire as a sector, we've seen a good numbers which has come up across the board. So it's not only in the large cap, but also in the mid cap space. So if we start from say maybe a Sun with a superb numbers, both domestic as well as global, and I think secondly specialty chemical division has also done very well. Secondly, if we come back to a place like say Gland Pharma, which had last 3-4 quarters were very volatile, and then post that and last quarter number which came up, I think Q1 quarter number was robust quarter, and I think we saw the price momentum. The stock which has given a highest return in a 2 months if you look at, or maybe on a quarter over quarter, is Gland Pharma. So now coming to Oro, I think again the stock has done well. Last 2-3 quarters the numbers have been very static and a good set of numbers for Oro as well. The stock still remains with a growth trajectory on Oro. So I think Oro will also continue to do well. And I think where the markets are at right now, I think people are looking for a defensive bet, and where the numbers have also come much ahead. So I think preference obviously being the Sun, being the leader in the entire space, followed by obviously Oro and Lupin. All these 3 stocks looks quite promising. And I think Gland, which have been very volatile. So I think now the numbers street can expect a consistency of the numbers. And I think where the management has given a strong commentary will also continue to do well. So I think these 3-4 names should do well in a pharma as a whole.
We've got Naresh, I'm going to discuss an odd one out. When I say odd one out, literally an odd one out, and that's Tridal Limited. Yesterday, the stock actually just went, surged on strong volumes. 36 rupees, 10% higher volumes, way above the 10-day average. One day wonder or anything more?
So I would say there could be more legs to it. There are 2 reasons. One, the volumes are almost 10 to 20 times the normal average volumes. The volumes were lower, but if you look at what has happened to the stock was at 70 rupees in the previous cycle, and it went up in 2021 from 10 rupees to 70, and 70 went back to 25 to 30 zone. So it has corrected, and even now it is down 50% from the top. Then second part is what has happened to the rest of the sectoral names. So if you look at Welspun India, there has been a strong rally over the last few months. There has been a strong rally in Indocount Industries. So all these players, even a Himmat Singh Seed, which is the one which has underperformed similar to Trident, has also moved up. So there is a case for Trident to go back at least towards that 40-45 mark. So for any fade off today could be a buying opportunity, buying closer to 34-35. And eventually this could also play a catch up with the rest of the sector. So positive on the stock purely from the aspect of the large correction as well as the sectoral trend.
which is at a 10-year high and made a fresh 10-year high yesterday, was actually Praj Industries, and it's been a tough stock to call off late, and finally it's above 500.
Yeah, but I think the last 4 months have actually been much better for Praj as compared to the last 2 years. The last 2 years, it was very difficult to call the trends for Praj, for the sugar stocks, because they were absolutely sideways. Even I think there was a point where many of these stocks were trading or reeling below their 200 moving averages, respectively. But I think the last 4 months have changed the texture for these stocks. Praj specifically has managed to come out of this 2 years of consolidation. The previous high in 2021-22 for the stock was around 470, 475. That's taken out for the stock quite comfortably. So I think it's a start of a sweet trend for Praj Industries over the last 3-4 months. And when you look at this in the entirety over the last 4 or 5 years, 2020 low for Praj Industries was around 50 or 55 odd rupees. From there, the stock has almost gone 10x. So when you expect the stock, or rather when you see the stock going into a 7x, 8x kind of return in a short span of time, you're bound to see these stocks going into a time-wise correction. That's happened for Praj Industries. And what the stock has shown is a breakout of this time-wise consolidation. So this should augur very well for the stock over the medium to long term.
The other cluster of names which was very active yesterday and has been off late is the Adani group of names, be it in Adani Enterprises, Adani Ports, Adani Power. The entire, group entity stocks were actually holding out in trade. Of course, there's news flow as well with regards to Adani Enterprises. The promoter has acquired an additional 2.25% stake from August 7th to 18th. Stake has now risen to almost touching 70% at 69.87%. But yeah, most of these group entities were flying high in trade. Naresh, any trading opportunity in any of the Adani names?
First itself would be Adani Power on dips, because that's a stock which has gone beyond the 27 Jan prices, which is where the fall started in the Adani group. We've seen a big block deal. So going forward, 300, 310 should be a base. This could surprise on the way up. And second could be Adani Transmission, which has corrected the most, and we are seeing power as a sector doing well. So these are the two names where one could look at it. Adani Ports actually moved up quite a bit in the last 3 sessions. Otherwise, on dips, that's been another stock which has crossed back the January highs. So would try to focus on companies which have actually been able to digest the whole fall and taken a new move. So Adani Power looks interesting on dips, Adani Ports, and a risky bet would be Adani Transmission.
The take coming in on some of the Adani group names and where we scout for trading opportunities. But let's shift focus and talk about Varun Beverages. The company has given a steady set of gains since it listed in 2017 and has also managed to outperform the Nifty FMCG index so far this year. What's aiding the stock though? Vinny is here with more details on that. Vinny?
Good morning. And talking about Varun Beverages, and since the time we have seen since listing, look at the gains that have come in the stock price as well. It's been a consistent compounder is what we could call it so far. And just in the last couple of years and last year, when you look at it, 123% gains that the stock has seen. Even YTD performance when you're looking at as of now, Varun Beverages is outperforming the Nifty FMCG index. It's outperforming most of its peers in terms of the stock move as well. Look at it in terms of Nifty FMCG, seen a 17% gain, while Varun Beverages has managed to see a 36% gain. Now, when you look at it also in terms of market cap, just in the last 1 year, exactly today when we looked at the market cap, it was at 65,000 crores in terms of Varun Beverages market cap. Now, it's above Britannia's market cap. It's at 1.16 lakh crores currently. So it has crossed the market cap of most of the FMCG companies as well, whether it's Britannia, GCPL or Dabur as well. So yes, very strong up move that we have seen coming in Varun Beverages overall. Now, why is that so? When you look at it, we're seeing an uptick in terms of the beverage category as a whole. The penetration of that has increased, and that also aids in terms of Varun Beverages. Other than that, despite it, being a lower penetration compared to other FMCG companies, they have managed to see a rural volume also and sharp increase in terms of rural volume growth as well. Also, the main company, that is PepsiCo, counts Varun Beverages as a very important part of their business. And they're giving it a lot of contribution, and in terms of adding business to Varun Beverages as well. And in terms of territories in South Africa, they are doing quite well. So the international business in terms of bottling for Varun Beverages, that has been quite strong, whether in Morocco or Zimbabwe, that has seen a significant growth as well. They're focusing on the high margin business, that's the Sting business and the energy drink business as well. While in terms of obviously the growth in the brands of Sting as well as their milk-based beverages also has seen very good growth, as well as, you know, the asset turn of around 1.8 to 2 times is what the company is expecting for the new investments and new capex that they are making. So that's also going to be very interesting. Now, obviously, in terms of the bear case, when you worry is like, you know, the competition that we're seeing in the D2C business. The company is trading at a premium compared to other FMCG players when you compare in terms of the valuation. It is quite expensive compared to other FMCG players, while currently in terms of 5-year average also for Varun Beverages itself is also quite higher. So that's a concern that one watches out for. But in terms of growth, the growth story seems to be very strong for Varun Beverages, and also in terms of demand trends.
Varun Beverages, we all know that stock, don't we? Well, why? Well, they're the bottlers for PepsiCo, which means from Diet Pepsi to regular Pepsi to Tropicana, they've got all up there in terms of where their portfolio is. The stock's done extraordinary. Extraordinary is the word in terms of the surge. 2017 up, 2018 up, 2019 up, COVID year up, post-COVID up 45%, and 2022 they've managed to hit out of the park. Rahul, what's driving Varun Beverages? I mean, it's a stock which is now commanding a P multiple of what, 40, 50 times?
I think absolutely right. I think it's just been trading like your FMCG companies and way the Varun Beverages is. And if you look at, obviously the markets have been very good for them in terms of the growth sectors. Secondly, I think with the launch of, as you rightly pointed out, I think the sugar-free drinks in our soft drinks, I think that's going to drive more. Second, I think the dairy beverages, which they've been focusing on, that's going to drive the markets for them. Thirdly, I think way they have been into of the various other markets, as you pointed out, in terms of be it be juices, be it soft drinks, be it energy drinks, which they're going to get into it. So I think all this way, which is going to be a growth structural story, they've been adding capacities and they've been increasing their strength as well as in Western and South India. So in all across pictures, I think there could be consistently growth compounder. So I think that's the year on year, if we look at it, where the stock has performed, the company has grown and the markets have been re-rating them. So at this level, also at 45 times also, most of the analysts on the street expects that they will continue to deliver at a better rate, and then this will continue to perform. So as we also believe there could be another 15-20% upside from the current levels, from the current valuation as well.
The other stock which I want to bring out today, and we'll be showing an excerpt of 18 hours interaction with Mr. Rakesh Sharma, Bajaj Auto. Let's look at the stock here. Rahul, what's your view here? I mean, this is one sector. When I say one sector, two-wheeler sector, where the business is slowing down, and there is no large reversal in sight. Do you think Bajaj Auto deserves a different positioning because of its export business, or the aggregate picture will continue to hunker the P multiples down?
So I think if you look at the entire two-wheeler as a space, I think very few of them have been able to do well. And I think if you look at Hero has been underperformer and Bajaj Auto has been re-rated. So I feel that where the numbers with the launches, I feel this will continue. The valuations is very dirt cheap. I don't think so. They're expensive at that, any insane valuations. And what we see in last couple of months and couple of quarters as well, the earning trajectory has been what they've been talking about. So I think I would expect a major upside, but I think yes, 15-20% kind of a compounding with most of the large cap companies in the Nifty universe which have been doing it, I think. So this will also compound in the same way, which looks like for next couple of years.
Okay. Rahul, stay with us. We've got a very special interview lined up. Let's hear out what Bajaj Auto's view is on exports as well as the kind of domestic growth in the two-wheeler market that they foresee.
I would say that the emerging markets story is far from exhausted. It holds a lot of potential still, and we are very optimistic about it. But we don't think it is going to sort of play out very rapidly. There are going to be ups and downs, and we will go through them.
So the down what you see in the last quarter, was that a one-off?
Well, the down cycle commenced really in the beginning of last year, which is FY23, in I would say April, May, June, when when there were changes which the Fed made, and the dollar became strong, and then there was weakening of a lot of emerging market currencies, which had two consequences. One was that there was devaluation in these countries, which meant there was inflationary pressures. And the second was that the central banks in these emerging markets took a very cautious position and started to preserve their dollars. And, availability of dollars for international trade sort
Has that
of
changed
reduced.
for you?
And that sort of set the whole cycle in the other direction. We are seeing some, let me say, bottoming out of this in the last 2-3 months, and now we are not seeing a rapid return to the period of FY21 and FY22 as yet. But like I said, the macroeconomics sorts itself out, and if there is no further geopolitical tension, because the fundamental drivers will start to kick in.
All right, that's the big exclusive you don't want to miss. Meantime, lots of other stocks as well that we'll be tracking, and wanted to get in your take, Rahul, as to what the outlook is when it comes to Aurobindo Pharma. Just earlier we were discussing the outlook on this space, but as a whole as well, where is it that you're seeing value within mid-cap pharma in particular?
So I think overall, if you look at most of the pharma stocks have done well, but I think I would stick to a large cap pharma names rather than a mid cap pharma names. I think that's the reason primarily being as a consistency of earnings, and it has been a lesser volatile. So in a pharma, after coming back as an entire sector after 2 years, come back. So I think most of the stocks have done quite well. So I think Sun hitting like I think 6-7 years high now. It's been trading, and I think the management has been guiding. So this will continue to do well. So I feel my preference would be stocks like Sun Pharma with a consistent compounder. I think the risk versus reward would be quite favorable with the management strong guidance as well. So the preference would be Sun. So another 20% upside easily can be made in from the current levels where the other pharma stocks have done. So I think this remains my top bets among the sector.
Talk about is HDFC Bank, and if we could just bring up the year-to-date chart and then perhaps a 52-week chart as well on what HDFC Bank has then. And this year, it's down about almost 2.5%. Macquarie's got a very interesting note on HDFC Bank, wherein they're maintaining their outperform with a target price of 21.10 as opposed to the 15.89 levels it's currently hovering around, saying that the elephant will dance, be patient. Rahul, what's leading to HDFC Bank's underperformance, A? And
elephants can dance.
Yeah.
Yeah.
The elephant will dance, be patient. And do you think patience is going to pay? Will the elephant dance?
So I think way the HDFC Bank has underperformance, if we see in last 2-3 years, I think maybe this is the 4th year of underperformance. Say if I bring out the charts and if you look at it from 2019, I think 13.50, and the stock is today at 1600 holding on that. So stock has done nothing. So if I look at similarly with other large banks like Kotak, also has been done nothing. So but post merger, what I feel is I think 2-3 things positive side for it. What HDFC looks like, I think the kind of synergy between Limited and Bank, kind of the way the stocks have done it. I think the growth, which entire sector as a whole, what we feel is continue to do well. And I think the peak out of the interest rates, all these things are positive for the bank. But I think what's not driving is, I think one is obviously the adjustment by the mutual funds side to can't own more than 18-20%, which most of them are holding it. So I think that reduction and that selling is bringing the stock down. But I think that's all technical factors for a while. But I think where the management's commentary and way that they're talking about that adding HDFC Bank every 4th year, the size of it. So I think this will continue to be a continuous compounder. So I think the patience will definitely pay off. And as they say that elephants can't dance, but I think my biggest bet, I think what I feel is from here in the entire banking sector, if the sector has to lead to HDFC Bank. So I don't think so. Underperformance will continue from here.
All right, Rahul, thanks so much for joining in as always and sharing with us your outlook on the markets. All right, for now, there are the pre-open rates on your screens around the 19,440 mark. You've got the Sensex up about 30 points in trade. But interesting in light of the fact that it's been a mixed handover from Wall Street, what, those mid-cap trading strategies as well are going to be, as well as a view on the market open in a short while. So, Naresh, let's get in your top mid-cap trade.
So that would be about an NMDC. The stock has been making a base around 115 and over the last few months has made multiple bottoms around 105. In the last couple of weeks, it has made a range-bound move from 115 to 119, 120. A breakout of 119.20 should give a good move towards 140 in the short term. That would be a range breakout here of the last few months. Expecting that to happen over the next few sessions itself. Stop loss at 114 and a target price of 140.
I was just casually looking at your recommendations, and I think yesterday you spoke about EIH, and then Kunal I think had one on Indian hotels a couple of days ago in terms of a stock which has consolidated, chartbuster stock. My point is, Kunal, Naresh, are we reaching that point where it's time to revisit hospitality stocks, hotel stocks again? Have they consolidated enough? These are bull run stocks. You consolidate in a bull run, you spend some time, you sweat it out, you reload your energy, have your drink of Gatorade, and then take the next leap forward.
Yeah, I think many of these stocks have actually broken out. So Lemon Tree is the other stock which has actually broken out of, I think, the last 3 or 4 days. The stock has run up from 15 to 20%. So it's not an individual stock, which is doing well. It's the entire sector, and especially the ones which have been consolidating for quite a long time. I think these stocks are making a good comeback. Indian Hotels has not made a strong comeback, but I think the stock has also gone through a time-wise correction. So I think 380, 385 is where the stock is trading broadly. I would still believe that that's a good opportunity to try and chip into this name. But yes, broadly, most of the stocks, EIH, Lemon Tree, etc., these stocks are making a very strong comeback for themselves. So that's for Sona BLW, Sona Comstar. That's a stock which looks extremely attractive on the charts. In fact, a couple of days back, I had recommended closer to 555 levels. It's moved up towards 590 mark. I would still believe that the stock holds potential to cross that 600 mark in this leg of uptrend. 615 is where I would place the target for the stock. Stop loss at 575.
All right, let's move right on then and take you through some of the other top stories that we're tracking. And it's the US, which is in a major development, as we've seen Trump planning to turn himself in and be processed at the Fulton County Jail on Thursday. This is in connection to the Georgia indictment that was just revealed last week, where Trump was charged with a total of 41 criminal counts in connection with efforts to overturn his loss in the 2020 election in the state. Meantime, chip manufacturing company and a unit of SoftBank, ARM, has filed its papers on the Nasdaq for listing without actually releasing the details on the size of the offering. Remember, the UK-based company had previously filed for a listing in the US confidentially earlier this year, after which the UK blew the London Stock Exchange. Meantime, the US drug maker Teva has agreed to pay $225 million in criminal fines over 5 years to resolve charges related to price fixing 3 medications, including a generic cholesterol drug. Meanwhile, Glenmark will pay $30 million to resolve charges alleging that it conspired with Teva to fix prices for the said drug. And in a letter to shareholders, Paytm's founder Vijay Shekhar Sharma has said that they will be investing in artificial intelligence to focus on building artificial general intelligence software stack. He's also said that this development is not solely intended for the Indian market, but can also be leveraged outside of India. And the countdown, of course, as we said at the start, begins for Chandrayaan 3. It's set to be the first space mission to make a landing on the south pole of the moon in less than 48 hours. The Indian Space Agency said that Chandrayaan 3 is set to land on the moon on the 23rd of August. Certainly a historic moment for India.